Hello guys, so here is another trade I took. This are synthetic indices, VIX50 index. So here I did this scalp on the lower time frame. I took one trade and didn't take the other trade because I was not active. So here again on lower time frame I was on 3 minutes, and on the 4 hour you won't be able to see what I saw on the lower time frame at this region because actually it's only when you get to be advanced you will get to do analysis on our time frame, and there was on a 20 minutes. Meanwhile, on a 4 hour it's really bearish, so it's better to be on a bearish trade since it's been bullish. Sorry, it's better to be on the bullish trade since it's been bullish from here than sales. But what happened? What did I do? I did a counter trade. Okay, I did a counter trade and forgot to take the main trade, which was at this area to buy. So what am I doing? I was selling here. What did I see? Right here is what I saw. The market trades down. Right, we have lower high, lower high, lower low, lower high, lower low. Right, we have this low that was broken, taking out the sell stop that was resting here. Since liquidity was resting here. Now, what did market do? It trade up to that area of supply where we have this other block that was here. This here did not tap into it. It was inducement. So, like if I zoom in, you'll see it did not actually tap in our point of interest right there. That other block right here. Yeah, most trader call it supply, whatever you want to call it, you call it. So yeah. So this here we are looking at is an inducement, right? It failed to tap in to that area of supply. So what really happened? The price trades back up and we see it tap into the area of supply nicely in a trend line pattern, right? In a channel there. So it approached our points of interest with liquidity. So yeah, this is where I'll be entering with confidence because price approaches my point of interest with liquidity. So um most times I validate my point of interest, area of supply and demand where it approaches with liquidity. If I can't find liquidity approaching my point of interest, it's most likely that I might find it being violated. So for my order block, in my own point of view, for my order block to be valid, I see it come approach it, price approaching my point of interest with liquidity, right? And it is at the area of institutional pricing. So right here, this is what actually happened. Even though we are on a bullish trade, right? Even though we are on a bullish trend, so the price trade back up, mitigate the area supply, trades back down, and what happened? It took out this trend line liquidity. So retail traders, they were doing the break and retest. We wait for a retest here with a stop loss above there. So now it broke, it retested, respected the trend line. What really happened? Those they were selling short here, the stop loss will be above there because they are trading with retail concepts, right? The break and retest. Now what happened? It puts them in the market, activate the orders, put them in the market, but not for long. What will happen? It takes them out, right? So this year was where um, this year was where I did the analysis. Right, I was here. This was yesterday, I think so. Yeah, it was yesterday. So I was um at this. Yeah, this was the analysis right there. So what really happened? What was I looking at? I was looking at the imbalance that was left behind here. And what was in that imbalance? I have an area of supply. The last buy that led the sell that broke structure and grabbed liquidity. Those I was looking at. I was looking to enter here and sell down to this area, right? This area of imbalance we had here and that last bearish candle. Those I was looking to sell and buy. But since I sold, I didn't buy, so it is a mistake. I was so dumped and I didn't bother to chase the price, right? You just have to relax, regret, and yeah, wait for another opportunity, right? So, as I was saying, I was looking at this. So what happened? I wait for price to approach my point of interest. Now, the smart money traders, they are, how did they have the entry? They are waiting for the retail stop loss to be grabbed, right? Now, the stop loss will be grabbed. They will use that stop loss to activate their own order, right? Now, they distribute price to those who are willing to buy, to other smart money traders who are willing to buy at the point of interest, right? In which we have this gap, fair value gap here. And more interesting, we have a quasi model right here, right here. Since we are on the bullish trend on the higher time frame, right? So I was expecting price to come back to clear this imbalance that was left here. We have sell side imbalance, buy side inefficiency right here. There was no buying pressure here. This was just sell, right? And yeah, the algorithm. This is how the algorithm operates. It is programmed to operate in this way, right? There is no buying pressure of buyers and sellers in the market. It's just the algorithm delivering price to, and what you know is that what is the algorithm looking for? What is it looking for? The algorithm is looking to do what? Clear imbalance. It is running to clear imbalance and is also running to take a liquidity. Sell side, liquidity, buy stop, sell stop, trade line, double top, and all those retail concepts. That is how the algorithms are made to operate. Alright? So the way we use my money concept on currency pairs is the same way it is being done everywhere, both stock market, crypto market, and synthetic indices. Right? Okay, you get the point. So smart money concept, the institutional trading is also used everywhere. I use it everywhere. I'm using it everywhere because I understand how the institutional operates. I know how what the algorithm seek for. It seek to clear balance, it seek to take out liquidity. That is what it is being programmed to do. It is an algorithm. It's an algorithm. So the higher institution, that is how it doesn't change. It's everywhere on anything trading. It's the same. Alright. So um, on the 3 minutes, I placed a sell limit right there, and we see the price came back there. So down, we have an imbalance right there. And also you would say this here is an area of supply, right? Since it was the buy they did to mitigate after grabbing the stop loss, they bought to grab stop loss and then sell down, right? So the price trade right into the clear imbalance, and you see it selling down. Why it is selling down? It is selling down with wicks clearing out every imbalance that was left behind. You can see that wicks. And what happened here again? We see another area, little area that has imbalance and an other block right there. But this is not, like I say, it's not every other block you see you call an other block. Okay, there are rules in everything you're trading. Okay, for you to trade on other blocks, mostly I advise to trade with the higher time frame. Don't mind me using the lower time frame. Alright, don't mind me using the lower time frame. This is my specialty. Alright, it's me training my eye, training myself more advanced, because I was able to take trade on lower time frames. Alright, so we see this here, we have imbalance here, right here. So after it taps to the area where it needs to buy, trace back here, clear the imbalance, right? Clear the imbalance, and you see the consolidation. There was no imbalance left behind. So what happened? We consolidate at that area for a while, clearing every imbalance, and what happened? It shoots out and then continued the bullish market, right? So on the 1 minute, you can see that here. See that supply zone, the inducement, if a fake high, an area where you would think it tapped your point of interest, but it did not actually tap into your point of interest. So that was what happened right there. imbalance here, it was cleared. So now imbalance here, see the market trace back down and mitigate an area of demand. This is the base, rally base rally, right? Rally base, we have the rally, we have the base, we have the rally, and you see trade back down there, goes back up, and then you see break structure. Now this is what I missed to buy, right? Right here, we have QML right here, right? We have lower high, lower low. Sorry, yeah, lower high, lower low, lower high, lower low. And what happened? We see it break this high right here. We have that break of structure, right? We have the break of structure, and we see it trade back down, right? You see trade back down, and then goes back up on a trend line. So what happened here? What happened here? What do you see here on this lower time frame? 1 minute chart. We have the rally and we have base. We have a little consolidation right here. That is our base, right? Rally base, rally, right? So my friend, we call this little consolidation a build up. He calls that a build up. I learned that from him, and it's something he, I would kind of like say he invented this because it's difficult to find. You won't like it's difficult to find this you're seeing. It's difficult to find them. Okay, it's something you won't be able to see on higher time frame. These are things you see on lower time frames. So how do you find them? Just like we have this area here, then we have the market also did this here, and then we have another week crossing it like this. We have another week crossing it like this, and then we now have another bullish candle right here. So that is how you might possibly see it on the higher time frame. So right there is your area of build up. Right there is your base area. Little consolidation that did a rally and then break structure. Okay, a little consolidation that did a rally and then break structure. That is what you call the build up. You can call it your base, area of demand, whatever you choose to call it. All right, so that is how you actually see it on your higher time frame. Okay, I also know someone that calls this king, right? Depends on how you're using your KML to trade. So yeah, we have the KML in line and the confluence with this base here, this build up that was made here that did a rally. Okay, rally build up rally, rally base rally, rally demand rally. So what happened? The market price traced back into there. Right, this is kind of like a sniper entry, right? You see trade into there, mitigate that area, consolidate other area a little, and in confluence with the KML, it was holding the price, so it held the price. So like I said, if I run down to the 2 minutes time frame, you will see the pattern I told you right there, right? See right here. So trades into KML, mitigate the main zone, consolidates little. This area held price, but since it is a bullish trade, every supply zone is not meant to hold price for long. It is only meant to do that as a retracement. Okay, so I trade the retracement, I trade the pullback into this area of demand where we're supposed to continue the bullish trade, the bullish trend. So what already happened? You see it mitigates our point of interest, and then you see it rally, continue the bullish structure, and taking out buy stops resting on each of these high, right? So yeah, that is just it. Trading on lower time frame is it's fun because you have minimum stop loss. Imagine me tracing the trade here and my stop loss here. It is minimum stop loss, right? A good and better risk reward, right? Then see me on higher time frame. Like if this whole thing is my order block, I will place limit here and place a stop loss here. That will be very huge. So it's something like this. It tapped in, right? if I did a snapper entry here, sell here, stop loss here, you know, I can have a trade here and have a trade here also. But what did I do? Since I noticed it tapped here, this here I did is a confirmation entry because I waited for it to break structure. We have imbalance, we have trade, we have liquidity here, it grabbed. We have imbalance, we have area of supply, area of the block that was left behind, and you see it tap right into there after trying the imbalance, so down a little, and mitigate the area where the institution will be having to place the order, and we see it bullish, and that was a hell of a trade. And I saw this, I was crying. I was like, man, I missed this. Okay, since I participated in this, I missed this. This will be more profit. The buy will have more profit than this because actually we are bullish. We are actually bullish, right? Actually bullish. So here it is on your 5 minutes. Same stuff. The supply right here, mitigate, imbalance, liquidity, grabbed, mitigation, return to the other block, and we see it right here. You can see you can see on the 5 minutes, like you see the down close candle, but what happened? We went straight to that area. So let's move to the 6 minutes. I think that will be a fair value gap. No, kinda, but yeah, it's, you know, still a value. 10 minutes, 10 minutes, 10 minutes, 10 minutes, 10 minutes. Okay, so there's nothing there. So there are things you won't even see on your higher time frame. You seen them on your lower time frame. Like look at this right here. Right, look at this right here. You didn't see this, right? You didn't see what I saw on 3 minutes. Like you might be thinking this is your other block. In which yeah, it trades right into that area, right? It traded into that. What happened? Yeah. So it traded right into that other block. But what happened? It consolidated. But this is the main supply zone, right? We have that week. So you can choose from the open price to the 50%, right? Because price is likely to trade into there. And we have it, did the stop hunt right here. Right? Just grab liquidity, stop hunt, broke structure, then return to the block. This here is another block. But what happened to here? That wasn't tapped, right? It was induced. So inducement is it has a fake high, right? It's a fake high. It's hold your market. It holds your trade for a while and then takes you out. Because the main area is here that hasn't been tapped. So the smart money traders having the orders here. Then the dumb smart money trader, the trader, because smart money traders, also smart money trader, we can be deceived by this algorithm also. Because I'm looking at this, I would say this is my order block, right? So grab the liquidity right there on that week, mitigate area of supply. So down, you see where I have my entry, you can't even see it there on the 10 minutes. So down, and then the structure continued. So let's keep on moving. Let's keep on moving. 12 minutes, 12 minutes, 12 minutes, 12 minutes. Okay, there is it. This is it. It's really, really clean on your 12 minutes, right? Like look at that. That is a clean order block right there in your 12 minutes. You see how I had my confidence. I had my confidence key on L and higher time frame 12 minutes order block, which is a demand area, a build up on the 3 minutes time frame, right? I'm very pained I wasn't able to take the trade though. But yeah, I will get to see another opportunity. Maybe in a while the market will consolidate just like this, and we get to find my entry on lower time frame. So this is a clean chart, bullish, trades higher, and I missed that trade. So yeah, that is it. That is it for now. Take care of yourself.